Canada ranks as the second best country in the world in 2023. In September of last year, the US News & World Report ranking of the best countries in the world based on quality of life put Canada in second place after Switzerland. However, this does not mean that the Canadian economy is booming. In fact, the country is coping with the worst economic problems in decades. In the third quarter of 2023, the Canadian economy has unexpectedly shrunk by 1.1% and barely escaped recession. Many experts think this is only the beginning of Canada's economic downturn, so watch this video to know more about why Canada's economy is in crisis and how to fix it. And don't forget to subscribe to the channel as we are shedding light on the most important economic problems in the world. Now, let's dive straight into the problem. For the past decade, Canada has been experiencing weak economic growth, which has been a major concern for policymakers. In fact, per capita real gross domestic product has increased at its slowest pace in almost a century. This is in stark contrast to the United States economy, which has grown significantly faster. Plus, the projections for Canada's GDP growth are also grim, showing that in 2028, the country's real GDP will grow only 1.66% lower than in 2018. Fraser Institute's paper vividly shows the problem. Over the years, the rate at which the economy is growing has been decreasing. In the past, the economy grew at a fast pace of over 6% per year, but now it's growing at a much slower rate of just under 2%. There was a brief period between 2000 and 2007 when the economy grew faster, but then it slowed down again due to the global financial crisis of 2009 to 14. The origins of Canada's growth crisis are primarily domestic, with the country's economy growing at a slower pace compared to other developed nations. The decline in business investment and exports has been the primary cause of slow growth in Canada. These are sectors of the economy that typically embed innovative technologies and reflect the competitiveness of Canadian businesses. For instance, investment in Canadian financial technology companies, fintech, fell sharply in the first half of 2023 as worries about the economy caused investors to pull back. According to KPMG, investments in fintech companies decreased by 3 times compared to the previous 6 months. In total, $353.7 million was invested in 57 deals between January and June 23, much less than the $1.09 billion invested in 87 deals in the second half of 2022. The first half of 2023 was the weakest period for investments in fintech companies since the beginning of the pandemic. And if compared to the US and other OECD countries, Canada's business investment is way behind. The investment in M&A machinery and equipment per available worker in the US has been significantly higher than in Canada, roughly 2.5 times greater. In the US, businesses invest approximately $10,000 annually per worker, while in Canada, the investment per worker is around $4,000 annually. Moreover, the gap between the two countries in terms of investment in intellectual property products (IPP) is even more striking. In 2008, Canadian businesses spending on IPP per available worker was approximately $2,000 whereas the US figure was around $4,000. As growth has decelerated, the focus of the Canadian government has been on income distribution rather than income creation. This has mainly involved stabilizing the short-term course of the economy rather than raising its long-term potential, which has only reinforced the downward pressure on growth. Over the past few years, several developed countries have adopted economic policies similar to those of Canada, which prioritize short-term demand stabilization over long-term growth. However, this approach can eventually harm an economy's potential, as the policies and behaviors that promote long-term growth are often the opposite of those required to address a severe recession. Canada's situation has been particularly concerning since 2015, with persistently low profit rates and chronic federal budget deficits regardless of the state of the economy. According to the Finance Ministry, Canada has incurred a budget deficit of 15.13 billion Canadian dollars, around $11.4 billion for the first 7 months of the 2023 to 24 fiscal year. This can be attributed to the faster growth in government expenditures compared to revenues. To put things in perspective, during the period from April to October 2022, Canada had a surplus of 174 million Canadian dollars. Moreover, policies such as government spending and monetary stimulus have provided only a short-term fillip to growth while depressing long-term potential, especially through their negative impact on business investment. In particular, these policies have led to a lack of confidence among investors, which has resulted in a decline in capital investment and a reduction in the number of new businesses being created. The Canadian Federation of Independent Business, CFIB, has released its latest Business Barometer report, according to which the confidence of small businesses across Canada has significantly dropped to its lowest level since the onset of the pandemic in April 2020. The report highlights that the 12-month Small Business Confidence Index has declined by 1.5 points to 47.2 in October, measured on a scale between 0 and 100. This number marks the third lowest reading in nearly 15 years. Then, there is the second problem, the massive household debt. Canada's housing agency, Canada Mortgage and Housing Corp, has warned that Canada has the highest level of household debt in the G7 countries. This means that if there is a global economic crisis, Canada's economy could be at risk. The Deputy Chief Economist of the agency, Elida Bjorworth, has said that the country's household debt has been increasing due to rising home prices. During the 2008 recession, household debt made up 80% of the size of the overall Canadian economy, but in 2010, it rose to 95% and has continued to exceed its size in 2021. In contrast, household debt in the United States has fallen from 100% of GDP in 2008 to about 75% in 2021. Unless the housing market's affordability issue is addressed, Canadians will likely continue increasing their debt. But how to fix Canada's economy? One of the solutions where we could agree with Fraser Institute is to facilitate the increase of entrepreneurial spirit. It's not enough for a society to just have entrepreneurs with innovative ideas. It's also important to have cultural values that support and encourage innovation. If a society doesn't value innovation or resents people trying to improve their lives, entrepreneurs will either give up or move to a more welcoming place. Canada hasn't been doing well in fostering innovation lately, which might be one of the reasons why its economy hasn't been performing as well as it used to. According to some studies, Canada lacks values that promote competition and independence, especially among young people. This contrasts with the past when Canada was known for its entrepreneurial spirit. Historically, Canada had a strong capitalist culture which was shared with the United States. However, since the 1970s, Canada's productivity growth has been lagging behind other developed countries, which might be a sign of declining cultural values that once supported innovation. According to a recent report by the Business Development Bank of Canada, BDC, there has been a decline in the number of entrepreneurs in Canada over the last 20 years. The report states that there are now 100,000 fewer entrepreneurs in Canada, representing an 11% decrease. However, the decline has been slower in the prairies, with only 8,000 entrepreneurs lost, which is about a 5% decrease. Pierre Clairaut, Vice President of Research and Chief Economist at BDC, shared these findings in an interview with Post Media. Starting a new business is a dream for many people, but unfortunately, 1/3 of new businesses fail within 5 years. This means that many people who want to start a business are not able to succeed. To avoid this, it is essential for entrepreneurs to have the right skills to make their businesses successful. The report has identified 4 groups of skills that are important for entrepreneurs to have. The most critical skills are grit and relationship skills that help entrepreneurs grow their businesses at all stages. Other important skills include marketing and finance, leadership and people skills, and operational administration skills. By having these skills, entrepreneurs can increase their chances of success and make their businesses thrive even in a complex and competitive business environment. Another aspect where Canada can boost its economy is the tax reform. Canada has a tax system that boasts consumption taxes at a relatively low level and with a broad base. It allows businesses to write off machinery investments, which is an excellent incentive for them to invest. Additionally, Canada does not impose wealth, estate, or inheritance taxes, as they may sound politically appealing, but have significant detrimental distortionary effects. However, the tax burden elsewhere in Canada is heavy. The personal dividend tax is significantly higher, which is 39.3%, than the OECD average of 24%. Similarly, the tax rate on capital gains, which is 26.7%, and the corporate tax rate, which is 26.2%, exceed the OECD average by 7.5 and 2.6% respectively. Worse still, good policies such as equipment write-offs are set to begin phasing out in 2024 unless they are extended or made permanent. It is important to note that tax policy alone will not fix Canada's sclerotic economy. However, a sound tax framework is a solid foundation to build. The Tax Foundation proposes two fundamental principles to inform such a framework: competitiveness and neutrality. By following these principles, Canada will enhance its economic performance and promote fairness and sustainability in its tax system. Overall, Canada's current economy is dancing around the recession, but whether the country will solve its long-term economic problem of lack of investment and entrepreneurial spirit is uncertain, as major economic reforms require significant political will.